2008, you said you were much better prepared for the investment world than you were in 1999. Can you go a bit more into detail about what you mean by that? When you say you were more prepared, are you talking more from capital perspective, or were you waiting for the markets to do something? What do you mean by preparation in that sense of the word?
See, I think few things I learned was that, it's all about, uh, so there are few mistakes that, like a starting investor makes, right? So one is, of course, you believe too much in, what other people are saying. So if there is a company and, there are, say, 20 analysts who are covering that company and all 20 are saying buy, you tend to believe that, that's the best buy that I'm going to do, right? So that was like my first learning, is that if everyone is saying buy and if everyone is already invested, that means generally it's not a great buy. So that was a mistake I used to make. I used to see which companies had the most buys, and I used to make that. Secondly, as the markets start falling, your instinct is to start buying because you think it's available 30%, 40% cheap. So that falling knife is something which I realized, just because the price has fallen by 30-40% doesn't mean it's a cheap value. You, after all, have to evaluate the business, much better. So in 2008, when actually the crisis started in January 2008, and then Bank of America, and then Merrill Lynch and Lehman Brothers, all of that started. And at that time, I thought that this is not something which is going to end very quickly. So even if the prices were down 20, 30, 40%, I never jumped in to buy. I held on to whatever cash I had, and of course, fortune also, sort of luck was also a factor, because when I came to India, I set a little bit into cash because I wasn't aware of a lot of companies in India. Because I never tracked the Indian market well. So I took my time to deploy. And when things started, going down, fortunately, I had 30-40% cash. And like previously, I didn't, start catching the falling knives. So that was the big difference. And then I started understanding the businesses and understanding the environment, how the financial crisis will have impact on each of the companies, which are the companies who will probably be able to survive. So I was much more rational rather than listening to others to take my decisions.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.